All right. So we're live. Let's see what we got. Yesterday, I marked out the new day opening gap, and I anticipated that to be filled. And today, looking at it, we have filled completely the fair value gap that we had on here, the daily fair value gap. And now price is reaching up on the upside. I was wondering whether these relative equal lows on the hourly will be tapped, but price just kind of left them around and continued straight for the new day opening gap, and then since then it has been going up and up and up into the buy side liquidity above here. So if you just take the range from this high to this low, we're basically in premium now. What does it leave us at? Well, looking at this fair value gap, like so, we're basically at half point of that. And because we have left this relative equal lows, and generally I'd say this is very one-sided move, I could see price going back into the new day opening gap for sure eventually. Let's do it like that. Also, I made a new layout with all the new day opening gaps and new week opening gaps, and we have a multitude, well, let's look at it like this, a multitude of new week opening gaps below us. So, and especially so because of the nature of the range that we're in, the range that we had since Thursday, August 8th. And August 22nd, we can see that we're still in premium portion of that range, and for some reason I would think we could see some move lower in the next couple of weeks, perhaps back into the equilibrium, back into the into the daily fair value gap right at the equilibrium. However, since I can't really say that it's clear on the hourly, let's drop into 15 minutes. So in 15 minutes, we have $7 o'clock right here. We have news at 8:30. Then the New York morning session continues all the way until lunch, 12 p.m. Then this is a 1 hour lunch that I usually don't trade. And then we have the PM session from 1 to 4:30. This is how I usually prefer to delineate my day. We have run out these highs. And right now, there's not much on the 15. Let's see on 5. Mm-hmm. Mm-hmm. Well, I'd say probably wait until 8:30. We have these relative equal highs that ran. We break lower a little bit. Then we have this failure swing back into this fair value gap. Fill the gap. Now we're trading in this area. Now, if I was to make any predictions gun to my head, I'd probably say honestly, I wouldn't know. It doesn't seem clear to me whether this is going to become the target or these relative equal highs just yet. But the manner in which we are navigating this hourly imbalance, you see how we touched the consequent encroachment and now we're on the way down and we're staying in the lower half of it and we have the upper portion remaining. That makes me think, honestly, we're likely to go back into at least half of this range, at least into the middle of this range before we do anything else. Hmm. This is a weekly chart. So this is our current week. What I specifically am looking at here is how we have already reached the consequent encroachment of this weekly inefficiency right here. Then on daily, this run up was followed by this retracement and slash consolidation. So we consolidated a little bit, retraced back into the fair value gap right here. This is the fair value gap on the daily. Now let me just mark it on the hourly and on more. Okay, well, the news are about to hit at 8:30. What I'm thinking, I'm watching this, looking at this fair value gap right here. And notice how price does not overcome the midpoint, and it cannot really get into the upper half. That is good. If this is the draw, if it does start climbing, then I would like to see how this up close candle responds to price and how price navigates around it. I want to basically see price pump up against all these similar equal highs and then stop in place and this up close candle and then break lower, all during the news release. and then eventually break lower below a swing low, and then continue on its way down below the 7 a.m. swing low for the sell side. Because I believe that we have higher likelihood of going back into the new day opening gap and lower into perhaps consequent encroachment of the daily fair value gap than going up here as of right now, just judging from the fact how this hourly inefficiency and how we're in the lower half of it. So far it's perfect. This is what I want to see. You note the bodies, they stop right in place, and then I want to see it drop. This is the wick, that's fine. The wick does the damage. Let's see what happens now. Okay, well now because we closed above, I'm thinking we need to wait for longer because I'm not following. The only idea that I have right now is that this rally higher would basically push everyone that was long since somewhere to here to long into it, and then this would be our manipulation, and then price would be going against, like basically it'd be a trap for longs. But other than that, I would need to see what price does. mark it yellow just because I'm not certain yet as to what price is likely to do with regards to that imbalance, but I'm watching it closely to see whether it will give me some insight into the narrative. Because, for example, if it trades below it and closes it below here, then I'm likely to anticipate a move lower because all of this was a sweep on liquidity in a way. We can sell this order block like this. The stop being somewhere above here. We have a fair value gap right here. I wouldn't want to see the consequent encroachment tap, but it does go for it. So then now I would anticipate probably some manner of retracement before the, well, actually the manner of retracement that I'm talking about, I want to see price stay in the lower half of this fair value gap. I don't like the color. Yeah, that's a little better. It could run against this high, tap into this order block, and then drop. or it could just drop now. Let's do this one. I like how it's acting. A little late of a sell, but regardless. I don't want it to touch that consequent encroachment anymore. And then this is the target that I think of. 815. Sorry, 850 buy limit. Once it reaches this swing low here, this is a minor sell side liquidity. I want to move my stop to break even. forgot to unmute myself. I was gonna say I accidentally moved the stop, but I put it back. And yeah, I definitely feel a little, well, a little something going on in here. But as I said, as I wrote it out, of course, I'm not sure if it's going to pan out, but that's not the point. The point is that I need to be okay with being wrong. And here I have this order block. And in my sense of understanding this, if I'm on the side with this, move lower, this order block should not be traded above. And specifically the mean threshold, the midpoint, that should be like the unlikely area for it to trade into. So here we have another imbalance. Just gonna mark it out. And I want to see this imbalance really, really resist price. The fact that I didn't leave it unfilled, I don't quite like it. Yep. Well, that was a fine entry. Now let's just read it until the end of the move and then journal it and probably close the trade from then, and then I'll just for the remainder of the day, or I guess remainder of the session, I'll just journal and backtest. So let's see what's happening. We got it back into this yellow gap. Now what we're looking for is to see if price remains in the lower half of this yellow gap, yellow inversion fair value gap. And now that it's trading higher, I don't really like it at all. I would prefer if it didn't. But we do have this up close candle right here, right before the move lower. And price came back up into it, touched it. Now I want immediate responsiveness on the downside, just like immediately. I would allow for the last touch of this bottom of this gap, and then I want to see it drop. There's the touch. I want to see a drop, and I want to see a fair value gap form. Then price come back into it, and then drop continuously into minor sell side and relative equal lows. When I see a gap leave, I want to see a space be left here. That would be our gap right here. Now instead of minor sell side liquidity, this is relative equal lows, just because we came so close to it. This is the one relative equal low, and then this is the second one. Now I want to see price tap this just by a couple points, a couple handles, and then start its run lower. If this doesn't get tapped, then it's a breakaway gap, but I'm not quite sure how I would use that in my repertoire. Right, this inefficiency gets engaged, and now we're looking to see if the sell program initiates. Preferably, I want to see a portion of this gap remain unfilled. That really goes to show that we're on the side with the narrative, and it's so strong that price cannot really come back up and fill that imbalance or reprice that inefficiency completely. I like this. Now this is an old SIBI, which was traded above, and now I'm thinking about it. I would still want it to act as a SIBI, so like as a bearish fair value gap. Let's see what goes on. I want the bodies to remain inside of it. I don't want it to start trading to the upside. It's too muddy. I don't like it. I don't like it. really doesn't seem to want to go here. So I think I'm just going to close it off. Yeah, I don't really see it. Let's just go over what we did. So we sold here and we bought back here. My aim was to, well, once I saw this move higher, this impulsive move higher, and then price break below to the bottom of this yellow inefficiency, it made me more inclined to believe that this is an inversion fair value gap. This is all in manipulation. We took out buy side liquidity, we went lower, and then the target would be the relative, well, the minor buy side sell side liquidity here, and then the relatively equal lows between 7 a.m. and 7:30 a.m. What ended up happening is once we came back up, we didn't touch the inversion fair value gap, and then we broke lower again, taking out a swing low and forming a bearish fair value gap. So I sold here, then price went into the fair value gap and proceeded to go higher into the inversion fair value gap. Now, if the trade pans out, like let's just say if the move in fact pans out while I'm talking here, then that would just go on to show that this CB, although it got traded above and now it's trading, well, really back into it and back below it, that CB, it basically gave away its spot to let the algorithm reprice into the inversion fair value gap, just because this is, well, if you look at this range, this is back above equilibrium, back into premium, and as we know, smart money would be shorting only in premium. Like they would go sell short once price is at premium, and they would only buy once price is in discount. That's just how it goes. So I'll definitely look at this once the price action has settled with its move, and then I'll journal on it. Yeah. Looking back, I wasn't really feeling that certain today on this. I did like the idea that price is likely to go lower just because of this huge buildup and because we ran the relative equal highs. But often that isn't enough, and you got to be really convicted in, like, have high conviction in your moves. I'd be interested to see if this move actually finishes at 9:30, so at equities open, because that additional volatility may just be the force enough to bring price into the targets that I was talking about earlier. But the manner in which it's doing it, it's really, I don't like it. It's a little muddy. Yeah. Well, with that, I'm gonna leave it off. Thanks for watching. Let's see what we got today. What's the damage? Damage is $33.54. I'm gonna record that. Yeah. Well, um, follow the risk parameters. I'm happy with that. It's all a learning opportunity.